Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. Home skillet swizzle here on a chilly Monday morning. I got to tell you, that's Dan Nathan, by the way. Soon to be joined by Carter Braxtonworth. It's Monday, February 2nd. Now, for you playing our home game, if January is letter F, what would February be? I don't know what that is. I have no idea what that is. No, it's not L. It would be G. Letter G.
EFG. I didn't think they went in like alphabetical order.
Well, I mean, F,
they
G.
have skipped some. There's only 12.
Well, there are skips because then you get to a V.
So that's a futures thing.
That's a futures thing, but it's not a futures day.
No.
Not that anybody cares about this, but there's snow removal going on.
Dude, the snow is like literally it's like stone out there.
It's like stone.
Because it's been a week and it's been like
able to
average wet, like
cold
7 degrees.
But they are doing it, they're doing yeoman's work. They have those backhoes and all those things, but it requires street closures.
Correct.
And in Manhattan, for you not familiar, especially in lower Manhattan,
call that a bottleneck.
There are a lot of streets that are one way. So when they close said streets, it really creates a problem.
It's frustrating.
So Swizzle, who left approximately 9:30 this morning from my abode, just walked in. Now, nobody cares about this. I understand.
I care.
What you should care about, though, at one point last night, as you mentioned, the S&P 500, which is what we look at, was down maybe tad over 1%, and Bitcoin was flirting with the 75,000 level that we have been talking about seemingly day by day. Things have obviously sort of caught a bit of a bid. We'll see how long that lasts, Dan.
Yeah, listen, this thing has retraced all of the move from this year. It's actually, over the last year, and it just feels like it's got lower lows. And, if you look at I said something on Fast Money Guy a couple weeks ago that I'd rather buy some of these companies that went public over the last year.
Like
the Circle,
like the what do they call that? The bullish
Circle, Gemini, than I would, the Bitcoin. Look at one today that's I think it's related to it. Like, look at Robinhood is down 8%. So there's some baby with the bathwater going on. And I think your point.
Did you really just say that?
Yeah, I think your point. By the way, pull up. Look at that. That is a mother of all Head and Shoulders top. And
it's going to look
200-day.
It's going to look eerily similar to that.
Yeah,
is Coinbase. You put up a Coinbase chart too. Seemingly have broken a bit of an uptrend. They're going to be hauntingly similar charts. But yes.
But it's interesting. I would much rather, and obviously we have a relationship with Robinhood, and I use Robinhood Legend, and I think it's very good. I would much rather own Robinhood, despite a very big differential in valuation, than I would Coinbase. I just think obviously Coinbase is, I think 70% of their revenue is still retail trading, but they do have this custody business, and they obviously have a stable coin. But we spending too much time. We're gonna hit Carter when he comes on in a couple minutes.
100%.
With silver and gold.
I just wanted to bring up, because I still believe I have to be, I have to go back to what I said. I thought that if Bitcoin would have traded 75,000, which it basically has done, I thought it would create a mass disturbance in a lot of this tech trade. And then when I heard about NVIDIA sort of talking back some of that spend, remember we talked about the sanctity of the spend, and they basically, I'm paraphrasing, it's not necessarily etched in stone, that $100 billion or whatever they've been talking about. I thought all those things, oh man, this is going to be a humdinger today.
Yeah.
And it's not really yet.
Well, Oracle, there was talk they're going to have to hit the debt or raise $50 billion. That thing opened up 6% or so, and it was up more than that in the aftermarket, and it gave a lot of that back, or the pre-market, excuse me. And again, it all depends how they raise that money, right? And equity raises are dilutive. It's a company that's going to have negative free cash flow this year. It's the first time since 1992. So again, go have a ball, raise that money. But if you have this sort of situation where if NVIDIA is pulling back from OpenAI, and OpenAI pulls back from Oracle, Oracle is telling you, well, it's okay because we're going to have such demand from good luck with that.
That's the hope, right? I mean, so again, if we play the game, if you had told me about these headlines, if you said this on Friday, and with all the things that are happening over the weekend, and Bitcoin's breaking down, and then you have the comments from Jensen Huang and all these different things, I'm like, OMG, NASDAQ's going to be down 2.5%, and it's clearly not. So that's why sometimes little information can be a dangerous thing.
Here, pull up CoreWeave for a second, because this is one where I've long said this is like this is the first one to get killed. This is the patsy. Go look at that high from 114 last week. That is when NVIDIA invested $2 billion in a company, $2 billion in a company that is heavily indebted, $2 billion in a company that, does not, I don't think I should know this, that don't have earnings, definitely not on a GAAP basis, but on an adjusted, no, they don't. On an adjusted basis, they still lose. But what did that $2 billion investment represent, Guy?
Well, I'll tell you exactly
what were they going to do with the money.
They were going to turn around, and then but it also, remember that CoreWeave deal, the IPO, they needed NVIDIA to come in order for that thing to get priced. So,
well, every time there's a pullback in the expectation for infrastructure build or capital raising, Corey is going to get nailed. All right, let's bring him in, because there's a couple things.
Carter
Braxtonworth of Worth Charting, because there's something else I want to talk about this before we get into silver and gold. Hey, there he is.
All right, good.
A little growth there.
So going on?
What? No, go ahead. I'm sorry.
I was going to say, what's left? Is the big one? Is it Amazon? Is that the last one?
Well, we have Google Wednesday. Well, Palantir tonight. Google Wednesday, and then Amazon on Thursday. So maybe we can rip through. Oh, there it is. We can rip through some of these. But Carter, I don't know if you just heard our conversation there. One of the things that's interesting is that this memory trade is kind of the last. We showed a lot of trades that have topped out related to, let's say, AI, and the memory, whether it's Micron, Seagate, Western Digital, SanDisk, it's been an absolute, frenzy. It's been, a bubble, and again, we were calling other parts of the bubble, but, we're getting to a point where it might be as good as it gets. I mean, these companies are telling you they're sold out of this product. They're telling you that they have pricing power. They have margins above anything that they've had in a very long time. Now, a lot of investors are making the argument that this is a secular shift, but Guy, it has the potential to go back to being cyclical. Is that correct?
100%. Okay. I mean, if history is any indication, absolutely.
So Carter, and Guy just said, if you told me the information yesterday, I would have thought this. You don't care much about the information. So
I don't know any about the information. That's right. I just don't know. But so therefore I don't care. But yes.
Well, all right. So you had a note out on Worth Charting on Micron, and we always enjoy the way in which you speak about the setup in one of these names. Let's just talk about the setup and then kind of what you're thinking, and because this is going to be instructive as far as I'm concerned about the whole trade.
Yeah, and let me just that thing about not knowing anything, because it is a fun thing, and not to say that what you're saying, nothing, and you're making over the course of the 30 years, sometimes I'll be in a room with a portfolio. Let's say it's a mid-cap TMT guy running 3 billion, or a large cap growth running 42 billion, literally, and new to the work, and they'll say, but you don't, you did this thing on Micron, you don't know that they have a growth rate that's this, or we just met with management, and what's happening, they could be, and then I say, listen, let me say this to you, we just, not to stop you, but we're both in the same situation, but in reverse. You are privileged to know all the things you know about Micron. This is talking to a man who may be a page one holder, meaning the third largest holder, right, of Micron, and a major state pension fund. And I think you have met with management, and you have all of the privilege and knowledge of what the upcoming contracts are, where their growth is, where they're beating other semis. But you're burdened by all that. You have all that in your head, and it's clouding you, but giving you insight. Now, take me. I'm burdened. I don't know anything. I don't know what the Micron. Wait, is that a shoe company? They do sushi? What is Micron? But I'm privileged. I don't have any of that, man. Both burden and privilege in reverse. And so the idea is bringing together skill sets. So if you're trying to engage a person who's dedicated his life to the study of price action, right, the pictorial representation of buyers and sellers, then we have a conversation. But to introduce that I don't know that Micron could means we should just go have coffee, because that's not why we're here. And then they say, you're totally right. I get it now. And they say, God, I am burdened. I kind of like management. We played golf together. I said, exactly. You're burdened and privileged by all that information. And in reverse, I'm completely burdened. I don't know anything. That's a big burden. Anyway, let's go to Micron, to which I'm both privileged and burdened. This is the report put out, I don't know when this was. This is the 31st. So I would just title the report was too much of a good thing. And just for fun, This is for microns. It bottomed, and semis in general, and this is important, bottomed before the financial crisis low in March of 09. The semiconductor index bottomed in the autumn of 08. And this is micron's performance versus individual prominent equities. That's incredible, right? Now, this is a high beta stock. Let's look at some other charts. So this is Micron's chart from that low. The stock was about $1.59, and here it is at 400 and something. Let's put in some, it's had, I count them, 6 drawdowns of more than 50%. Most notably the one, of course, in the financial crisis, it lost 91% of its value. But even as recently as the tariff kerfuffle, it lost 61%. So this is high octane, right? High beta and so forth. Let's look at the next chart. It's all the same chart. Where we are in relation to the smoothing mechanism. This is the highest reading ever recorded, ever, 125% above the green line, even including at any point in the dot-com. The highest ever got in 99 was 88% above. We are 125% above. Next chart, it's the same chart again. I'll be damned. We're up to the upper band, to the penny of a channel that's been in effect since the financial crisis low. $1.59 at the low, $4.55, compounded annual growth rate, a CAGR of 40%. I mean, the first thing once they stop right here, what the hell's wrong with all of us? Why did we just buy Micron? But anyway, moving on, next chart. So I've put a red arrow there. That comes to mind. Let's do a few more and we'll quit. So here's quadrants. Now, that might be the last chart. I can't remember. No, this is the last one. All right. So now one could do what the green and red arrows suggest or not, but too much of a good thing is how we title the report. That's my thought on Micron.
So this is in a 16, maybe longer. It's called an 18-year uptrend or so. I think, you know, the
right, 20-year chart, and it's 8 from the low, right?
Fair enough. So the uptrend is still obviously intact. And what you just pointed out, and I'm not comparing gold to Micron. I understand they're two things, but you know, as Dan has been saying for a while, gold, which had been going parabolic and been trading significantly of many standard deviations away from the 200-day moving average, it was just a matter of time before you saw the move of that we're seeing, and we'll talk about that in a second. So I say to you, I mean, this is albeit commodity versus an equity, I get it, but it's a very similar set of circumstances. You know, something that has recently gone parabolic and finds itself, you know, 4, 5, 6 standard deviations away from things that are normal, and it's reached the top point of an up channel again over the last 18 or so years. So thoughts on that?
Yeah, I mean, it just seems full, you know, back to, again, valuation as proven by the fact that the stock could move this aggressively from where it was in the tariff low and drop 60% because of tariffs. Valuation is a gray area. But what we do know is that when you get spreads that are wide and listen, parabolas, not to say that, well, who can define a parabola? Steep and uncorrected things have a way of having shocking givebacks. Most notably, it could be precious metals, but we see it all the time. You know, and these are risk assets. Look, how could Microsoft drop and gap like a third-rate pink sheet stock? But it did on its earnings, right? And so forth and so on. And so it's just a little bit of musical chairs comes to mind, you know, where it's a steep, uncorrected, and it's a theme, right? It's the last holdout. And you inferred that in your conversation at the top of the hour, right? That, you know, it's SanDisk and it's Western Digital, as other things. Apple has struggled and struggling, and Microsoft and software in general, and then all of a sudden, you know, certain financials, JP Morgan's down and so forth. So it's this is and then precious metals, and all of a sudden Bitcoin's not reliable. This is the ultimate risk asset now, where the dreams are still alive and no one has been hurt. That has a way of being crowded.
Well, to your point, I mean, that tariff drawdown from the highs in February to the lows in April, 60%. And I think a lot of folks just have very short memories. They just can't think that this is going to happen to their favorite, you know, tech stock, because this is the new thing. Carter, really quickly, because we want to hit silver and gold. You just mentioned Microsoft. So here the stock was trading 550, just basically in late October, right? And this is one we've talked about a lot. You see those two new highs, those big gaps. That was after the last two earnings. Now we have this gap to the downside. You see, I think that's the 150, you know, it got back up there, was repelled. Is that 400 in the offing? Let's go back.
Yeah, I mean, you know, gaps, you know, like a lot of gaps have, not all gaps are filled by any measure. There's that kind of thing. But this is the stock that's exhibiting bearish price volume correlation, poor relative strength. It has a double top that is meaningful and increasingly meaningful the further it goes below that level. And it has a re-rating up back in May, fundamentals. It gapped up, and now it's just gapped down also fundamentals, earnings. And in general, I would say they could always overshoot, and as they often do, the upside. When does Oracle stop? Oracle went bonkers the upside, down bonkers to the downside. At some point, there's a fair price for Oracle. But I would say with new money, if one said, what should I do with this stock? This is a short. It's a sell, not a buy. And if one is still in it long, I would continue to reduce, take measures, because the risk is that it continues lower to and prospectively below 400.
All right.
Carter Braxtonworth.
He's the man. All right, let's hit these moves in gold and silver. You watched it on Friday. We watched it on Friday. I think you had a call early in the week. Sell. You know, this was one of the ones. Well, actually, it was midweek, I thought. And you were on the other side of this trade. Let's hit your technical view, and then I think, you know, I know you don't care. I care about guys' fundamental view, because I want to put them the two together.
Yeah. So let's say there's the circumstance of a lot of people that have never been involved. So let's start with that. That's the freshest of all, right? The mind is clear. Is it something to consider nibbling or starting a new long? I would say so. I think that's an interesting. So for someone who's not involved, buying a little bit of gold after a major setback like this, I think has a lot of. I would say one thing, you know, the about narratives and about the stories that people have. That's an anchor. It's a mental anchor. It's a comfort blanket. You will, if you were to Google all of a sudden debasement, those guys they left. They ran out of the room. They all went sledding or skiing. You won't hear from them for a long time. So, well, was it debasement? But why not now? So it just like Bitcoin. You can go do AI search and Google. Bitcoin is digital gold. Do you know that you can see frequency? They can try that. You don't hear that all. Those guys all left. They're gone. Where did they go? He's gone. He's gone forever. You won't hear from him again, because that's nonsense. All of that's nonsense. Debasement. This just makes people. What we know is it went too far, and now it's come in. But I think you're down to a level where, one, if you never had any, buy some. Two, if one is in it and has just suffered this incredible setback, you cough it up here. I don't think so. I think you sit tight.
I agree with that. You know, I didn't think it would happen this quickly, but you know, you never see. But we had talked about, you know, these types of levels being, you know, in the cards. And what's amazing is it gets us back to levels that we saw in early January, probably. So you see the nature of the move higher and the give back over the course of a couple of days. I don't think the fundamentals have changed. I think one thing has changed, and we talked about it last week. Kevin Warsh being named as the next Fed chair has obviously shaken up the apple cart a little bit, and people are now starting to think, all right, this is somebody that historically has been an inflation hawk. He's going to be sort of somebody that comes in and realizes that we have a debt problem, and he's going to do what he can. So don't be as quick to think that this is going to be somebody who's just going to lower rates by definition. So I think that's what gold, in my opinion, that's sort of what gold, the dollar, and other commodities have been reacting to. The reality is, I believe all those things, but the fundamental story hasn't changed. And unless central banks all of a sudden about face on the announcement of Kevin Warsh, I think this is a place to buy gold, Dan.
All right. Now, I agree on the silver, and I'm sure you probably have the same view there. I've been nibbling at that, going back to SLV to Friday a little bit. All right. Last thing before we get out of here, you get out of here. Palantir tonight after the close.
Not a great chart.
Not a great chart. So look at that, and you know, that little support little channel we did, it's kind of your view, right? It's support is not, or resistance is not a exact point. You can fall into it, you can rip into it, that sort of thing. So what do you think here? I mean, here we are at $150. We're above $200. The stock had really stalled out. A similar view that you had, let's say, in like an NVIDIA. This one, to me, I've said is the dumbest effing stock.
Whoa.
I didn't use the word, though.
Okay.
that I've ever seen in the stock market. And I mean that. If let's go to a 5-year, this is a company that might have $6 billion in sales this year, is trading at 100 times sales. If that was earnings, it'd be egregious. So not a good chart, but is it at levels here going back to, let's just say, November, going back to September? What do you do here?
Yeah, I mean, so there's a large constituency of people who said you don't do anything. You never go in front of an event like this. This is just, you're going to short this thing because it's a terrible chart, and printing 170 in the indicated higher, and in turn get long because you think it's cheap. It's very high. So I would frankly not go in ahead of the number. But if we just stick with the principles of classic charting, we have a stock that has a circumstance of unusual and extraordinary strength that then in turn has started to stall and roll, a topping out formation, what characterized in the language of we're charting, a bullish to bearish reversal sell. And I think the risk is, of course, that even if it's a good number or not good, that you have a substantial Apple type, Microsoft type drop and gap.
Yeah, the head and shoulder, we've been highlighting the head and shoulders. I mean, this is taking a lot longer than I thought it would, but here we are, broken the 200-day moving average. You start talking about a measured move now, and this level, I mean, this 150 level is absolutely a bit of a line in the sand if you draw that horizontal line across those bottoms. So we'll see if and when, but a measured move, and I can sort of do the math in the back. You're looking at probably 120 to 125 or so here, Dan.
Yeah, I mean, this is something I've been kind of picking at with puts over the last, I want to say, a few weeks, maybe month and a half or so. And it hasn't been that easy of a trade because it feels hard to press something, and especially right here as it's trying to kind of hold at those prior levels. And I think what Carter just said is an important one, and I could see this. A beat and raise, depending upon the magnitude, you're gonna get a pop to 160, 162 or something, and maybe that's a better thing to wait. Playing for, let's say, this move back to 125 in one fell swoop on a gap. You know what I mean? On kind of a, let's call it a beat and modest guide. I mean, they should sell it, but who knows? So maybe a wait on this sort of thing. All right, Carter Braxtonworth of Worth Charting. Really appreciate you being here, man.
Likewise. Thanks, guys.
Bye. Later this week.
Carter, so man, we have some housekeeping items. It's a strange week we have.
Okay.
After we're leaving here today, we have some things we're gonna shoot.
Yeah, we are.
But tomorrow we're doing the market call at 2 p.m.
2 p.m.
So adjust your calendars accordingly. For you fast money fans out there, to the extent that there are any out there, February 9th, which I believe is, well, wait a second, starting on February 9th. Yeah. So this February 6th, Friday, will be the last fast money at 5 p.m. until the 23rd of February. There's a 2-week hiatus for the Olympics.
How about that?
We will still be doing the market call.
Olympics.
I like skiing.
I could give two shits about all of it. I honestly, there's nothing. You know what I mean? You know what it feels like to me. The Winter Olympics in particular. It's like, who's the best at exercising? You know what I mean? Like, and leisure sports. You know what I mean?
I think skiers would say otherwise.
Well, that's fine. Okay, so you're saying from the 9th to the 23rd,
fast money is dark, but market call is not. We will be here.
And you and I will be at iConnections on the 23rd and the 24th in Miami.
That's Miami. That's South Beach.
And we will be doing fast money there. You, me, and Melissa Lee.
So the return of fast money will be broadcast from Miami.
Correct.
What is today?
It is the 2nd?
2nd of February. Yeah. On my birthday, December 18th,
1960,
a lot of very famous people were born. It's a laundry list. I looked at today, February 2nd.
Yeah.
The only person out of the 50 that they say on famous birthdays that I've even heard of is Shakira. Shakira?
She's a singer.
She is a singer. That's it.
It's weird.
It's a little weird.
Yeah.
But here at Risk Reversal Media.
Yeah. Oh, I see what you're saying.
There's a February 2nd.
Soon to be famous, by the way.
Bill Hockman.
Billy Hockman.
Well, no, there's just a matter of time before Bill Hockman is a famous birthday.
I agree. I hope we get, he's an amazing stand-up comic. He turns 30 today without doxing. Well, we just
did.
At Billy Hockman, 30 years old.
Blow him up on the Instagram or the whatever.
And watch some of the videos with Clyde. They do great work.
Who?
Clyde.
I thought his name was
Clyde.
like Charles or something.
He's a great stand-up. All right, guy, we got to leave really soon because we have a couple
we do.
shoots. Let's just rip through a couple things really quickly.
Wanted to get that out there.
Disney. It's the experiences that we're doing
Apparently-
very well.
apparently-
Experiences.
It's not the stocks, though.
Stocks down 4%.
If you've owned the stock, it's a different type of experience.
Yeah, it sucks.
This is one, if you go back and say to yourself, mistakes, I shouldn't have done that. I think Bob Iger is probably saying, you know what, I probably should have left and never came back, because look at this stock since, I don't know, the spring of 2022. It's gone nowhere. And Doug Cass, who's probably watching right now, has been short this stock and correct to be short. I've thought a couple times maybe it was starting to show its strength, a couple times in 24, couple times early in 25, and each rally in the stock has been sold off. And it's not valuation concerns, but there are other things going on. I don't think it's a deteriorating business necessarily, but I think it's a reevaluation, a reassessment of where the multiple should be on the stock is what's going on.
Yeah. I don't have kind of much to add. I know that, some of that networks and the studio stuff is not in a great shape right now.
What's your favorite ride at Disney World?
I've been once in my life.
One time.
Yeah, in 1992.
You were young.
Well, it was actually December 91. I was there for the Hall of Fame Bowl. It was Syracuse playing Ohio State.
The Ohio State.
Kirk Herbstreit was the quarterback of that fine squad. Yeah. And I think
who played for Hughes? Was there a Bavaro on that team?
No.
Are you sure?
Who went to the Giants? Mark
no,
Bavaro?
not Mark Bavaro, his brother.
Yeah, maybe. All right, we got to go. So look, it's interesting. Like what Disney had to say about experiences, guy. Look at the how you would unless you lived in Florida and you were to drive, or maybe you were like going to Wally World and you would also drive from Chicago.
Moose out front should have told you.
Look at the airlines, ripping. Look at the cruise lines, ripping.
Okay, this is to me all good. Look at a crude oil chart, collapsing. So I think this is some sort of cause effect. You have a crude that's down a few dollars here.
You're just putting stuff together,
connecting dots.
Yeah.
So I think that's what it is. Some of these airlines, Delta, for example, is looking for an excuse to continue to go higher. I mean, this is one I think we've done a decent job. 73 was the all-time high. We sold off recently, trading 68 now. The prior all-time high was, I want to say, 67.5. So we've basically touched the high from February, if you go back a year or so, of 2025. So these past resistance becomes support. It makes a little bit of sense in terms of DAL, not crude oil.
All right. While we're on the transports, pull up FedEx, please. Comes out.
FDX.
New all-time high here, guy. This is one where, I want to say, going back to the spring, I mean, the bearishness around this space in general, we're going to look at UPS in a second. You barely have a rising 200-day moving average on this thing, but it's making new all-time highs.
Yeah, and if you look, there's an uptrend since October of 2025. You can draw that line. That's probably, if we're looking for a level to get in it, that's probably going to be like the third point-ish, which comes in, I don't know, probably like 290. Yeah, 300. Perfect. The moving average is sloping higher for the first time in a while. Valuation, which has been cheap for a while, finally, I think people realize that, wait a second, FedEx is sort of cheap, and they're probably a better operator than UPS. I don't think you have to buy it here, but I think you play that trend line. So look for a back and fill to what will be the third point of that trend line.
All right. So UPS, they had $13 in earnings.
United Parcel Service.
$13 in earnings in 2022.
What's the name of the company? I don't know what to tell you.
And then it went 878, 772, 716, and this fiscal year is supposed to be 707. So you've seen a declining earnings for the last 5 years. Revenue growth. Hold on one second here, Guy. Revs, they've been flat-ish since 23, around 90,000. So what do you do with this?
The term
so that
juxtaposed. So put a longer-term chart and go back to 2020, Amanda, if you will. And you will see that we just traded down to and seemingly held those 2020 lows. What do you do here? There's a downtrend. If you want to draw the downtrend from 2022, we're probably approaching it now. I can't believe I'm about to say this.
Tighter, I think. A little
but,
maybe.
I think this has a chance here. This could be one of those bearish to bullish reversals held. The trend line, we don't have to fudge. The line draws itself. But you see, held the 2020 lows, approaching a downtrend line. The moving average is flattening out. I think you buy UPS here.
All right. Would you? I agree with that. Would you consider a pairs trade, selling FedEx, buying UPS? How about that?
I know we got to go.
How about that?
I was at Goldman Sachs. It's probably 2002 or 3. I was in the equities. I was just sitting around, and Lloyd Blankfein, who ran fixed income, currency, and commodities at the time. I don't think he was CEO yet. No, he was not.
Will you let me do the punchline when you get there? Just set me up.
If you know what it is. Okay.
Dude,
How many
podcasts have
Lloyd used to walk around with a back scratcher.
Really?
Yeah.
That's weird.
Well, whatever. I helped him think. And he ran into Eric Mindich. Now, for you people who want to go to your Google machine, at the time, Eric Mindich was the youngest partner in history of Goldman Sachs. And he was running a group in equities. And Lloyd asked him, what type of trades they had on. And Eric, basically, I'm paraphrasing, we're long this and we're long that, and we're short this against it. And we have this option as a hedge, and we're short this against the option. And he went on for about 6 or 7 minutes. Lloyd looked at him quizzically and said,
sorry, I was not paying attention.
Holy
He said,
shit.
hold on. He
I
said,
can't
which
even
are
believe
you
it.
rooting for? He said, which are you rooting for? He did say that. I wasn't there, but I've heard it.
How do you know what you're rooting for?
Whatever.
How do you know what you're
All right,
rooting
but
for? So the point is, when you have pairs trades, are you rooting for FedEx to go down?
What
Are you
year
rooting
was
for
that?
UPS to
What
go
year
up?
was that?
03, I'm guessing.
And Mindich left a couple years later to become, he was like, not only he launched
Punson Street or some
he launched
street or Eton Katz. Or,
it was
Eton Katz was a kid that was abducted in the in the 90s.
They thought they caught the guy a few years ago.
Eaton Park.
It was the largest hedge fund launch in the history of hedge fund launches.
Mankind.
He started with like a few $1 billion. The one thing I'll say, in the last 20 years, something has changed dramatically. Back then, you used to let it rip. There was what I'm saying is you had this exposure that on a net, you were running like 70% long most of the time. Okay. And people would hedge with options or ETFs or that sort of thing. Now, most pod shops, that's the Citadel and a lot of these places, they actually run like net. Like nets are really short, they're small. Like they could be 10% net exposure, meaning like if you had $1 billion under management, you might have, 600 million long and 500, 400, you can do the math or whatever short. So that's all I'm saying. Like the business has changed a lot. So if you're all in on this AI trade, you're going to have to be short something against it. Maybe you back out factors and you'd use the Qs or something like that. Does that make sense?
It makes a lot of sense. So the world has changed, and there's definitely a lot more of that going on. We have, over the years, we've developed great friendships.
Yeah, we have. Well, you and me?
Yeah. Okay. No, we have, but with groups and individuals and companies. And one of them over the last, 8 or 9 months is Apex.
Correct.
And we've gotten to know Bill Capuzzi really well. And they're going to start sending, and Michael Tracy. Yeah. And they're sending us some, what they deem to be really important, tactical, timely information. So we'd like to take a look at that, Dan Nathan.
Yeah, so they do a market minute. And I thought this was really interesting because came out over the weekend, the end of the month, January. And there's a lot of, work that's being done about how January goes, the year and this and whatever. I just want to hit the leaders here because this I think it kind of flows into what we were just talking about. So on the month, Seagate was up 48%. Okay. On the week, it was up 18%. On the year, up 323. Now you can also go down the list a little bit. You're going to see Western Digital, right? And so, this is interesting. Western Dig up 6% on the week, 45% on the month, 67% on the 3 months, and then 408. So this speaks to that sort of bubble we're seeing in memory.
No doubt about it. I mean, that 408% is unbelievable. The other things that sort of stick out, Doug Cass was talking about the move into staples. You see Pepsi's on that screen. So something to look at. And
Telco.
The other two, and Telco. T-Mobile, what's-her-face, AT&T and Verizon also on this, if you look at 2 energy names. So to me, this is a great sort of, I look at this, obviously the other ones are great as well, but I look at this for a snapshot. That's a pretty interesting sort of month there. So thank you for the folks at Apex.
Yeah, but let's just draw a line. So you see on a sector basis, you see the VIX up 8% in the week, up 20% in the month. So think about that. You're seeing staples act better. You're seeing telcos act better. If you go down that list, you see utilities up 11% 1 year, 2% in the week, 12. So you see what I'm looking at there.
And you say to yourself, okay, the VIX is higher.
Yeah.
You have staples higher. You have Verizon, AT&T, and T-Mobile higher.
Yeah.
What is that? What is it telling you?
Okay, then look at the laggards really quickly. We've been talking about fintech, we've been talking about software, and look at that. And then at the bottom is circle. So it is the sort of things that we've been looking at on a daily, weekly, monthly basis. And you could make a little bit of a pastiche, guy.
I like that.
Pastiche. All right. So thanks to the APAC FinTech Solutions, our friends over there. Guy, I think we covered a lot of ground.
Sure we did.
Carter Braxtonworth brought it today.
When doesn't he
He's
not?
a seller of Micron. And listen, I would just say with a Micron, you might want to consider defining your risk using options. I'm going to look at some calendar put spreads. I mean, I think it's just a hard one to pick an exact top. And I'm really looking for this Palantir. I'd love to see a failure into the close. And then I might press it a little bit with some options. I might.
Happy birthday, Shakira.
And
Bill Hockman.
Yep.
David Bavaro, who's a fan of the show, graduated from Syracuse in 1989. So I was close. We'll be back tomorrow at 2 p.m. on the market call. Back to normal on Wednesday. We'll see you later, folks.
Okay. Thanks, everyone.